So, my name is Becky, coach at Blue Sky, and I am so happy to be here with you guys and have the psychology lab on Tuesdays at market close. This topic that we're going to get into today was recommended by no less than 5 Blue Sky traders in the last week or two. And it's the discussion around transitioning from, a developing trader who has had some success and is pretty excited about it and knows for sure that they want to be a trader, but bridging that into full-time consistency and allowing trading to be your full-time career that you pay bills from. And to be honest, it's a big topic. Like, it will easily fill this whole class today, because there's a lot of angles to this. There's a lot to think about. And any trader who has had a green week has had this thought in their mind of, this choice that I'm making of being a trader is going to fund the most amazing life. You start thinking about trips and upgrading your house and what car you're going to get. Tell me if I'm wrong if you've never been there, but I have certainly been there, where I'm thinking about all the things I'm going to do as a trader, and it's exciting. And I am proud of how far I've come and where I want to go and what all it's going to fund. It's a real conversation in my experience. So today we're going to dig into it and talk about like what to think about and how to approach it and where to take it. And see, right? Same. So I am with you on that. So I'm really excited about this conversation. So becoming profitable, and then working hard at getting better at our craft, and then the moment when you think it can be your primary income. So exciting, but also vulnerable, right? It's nerve-wracking a little bit to think about it. It's a part of a trader's career where you're transitioning and it means something different. And the topic is a little bit scary and intimidating, but also one that we should have like out loud with each other, think about all of the aspects of it, and kind of try to be more prepared and protected essentially when you get into it. So let's do it. This is how I sort of framed up the conversation today. So the emotional pull of full-time trading, right? That's the initial draw to it when you start winning. But then all the variables that you have to think about and really not underestimate, because you want to think about them with eyes wide open kind of energy. And then how to sort of guardrail this whole potential move in your trading career. And then, oh goodness, this fourth one, right? The relationships, the pressure, and the psychology. I feel like that's kind of the core to this whole situation. And so then at the second half, we'll really get into like some phases on how you can make this jump and what that can look like for you based on everything that we talk about, and different advice out there from traders even farther beyond me. So we're going to talk about the internal and the external realities of the shift. There's a lot to cover with it. So it's important to be here with you guys and have these conversations, because this is a part of being a trading, is not just the technicals and figuring out how to take a good trade, but how to become a trader in lifestyle and in business. And so that's what we're going to get into today with this conversation. Okay. Who's brave? Who's feeling brave? Let's see. Type it in the chat. Where are you at? 1 through 5 on this scale here. Are you very new and still on the overall losing money, or are you dabbling in the break-even world, which is actually a significant accomplishment in trading, is to be a break-even trader? Like, that is an achievement. And then you can get into like recently getting some profits, and then you get into some inconsistencies with it. Yeah. No one has to answer. No pressure. But this is the scale. And still losing money is a while. Like, let's be honest. That takes that phase. You can sit in that for a minute, because you can start earning and then go back, and you can grade that in different ways, month over month or based on accounts. But I'm telling you, break even, there's some 2s on here, and I am very proud of you all, because that means that you are moving along, Yeah, all right, killing it. So I am very pleased that you're all with me today, and I think that this is a great conversation, because we've got a lot of direction. Then there's some different traders in the audience today, which I love. Okay, so there's no right answer, right? This is just where we're all at and where we're moving, and thinking to yourself about where you're at and then where you want to go. That's a lot to think about. And I would argue that the in between 3 And 4, recently profitable and inconsistently profitable, that's the dangerous phase. And that is a dangerous phase where you figure out what to do with it and how to hold, because sliding between 2 and 4 is extremely common. And that phase can last years. And so that is what, we have to think about what to do when you get into that 2 through 4 stage. That is, a cinch point. So the emotional pull of full-time trading, the allure of it is something, right? The freedom, control of your time. You get to be your own boss. You don't have to dress in anybody's required uniform and drive anywhere and deal with parking and traffic. And you get to decide how you want to scale it and adjust and manage it. There's a lot of appealing things about being a full-time trader, having that be your income and what you create your life with. And so once profitability appears, it's natural to start imagining that, visualizing that, thinking about the dreams. There's no ceiling. It can feel like it's the final unlock of life where you really are creating. You're really creating your world. And there's no ceiling on what you can build because the market is abundant, like there's constant ways to scale and adjust and build and grow it. But that vision, it can add pressure if you start pushing against it too fast. And it's easier to do that when you get on a winning streak. I don't know if you guys have experienced this, but winning streaks can lead to confidence early. And sometimes there's an overconfidence phase that can be a little bit dangerous in terms of this. It can make it seem like you're ready. And maybe you are, but you want to think about that critically, because maybe you are, but there are factors that you want to think about and you want to make sure you're easing into it intentionally. So let's just think about the flip side to that, right? When you think about how that could be where you're going, trading full-time doesn't necessarily remove stress. It's not exactly a perfect promised land, in my opinion, in my experience, in my studying. But it concentrates stress in a certain way. There's some income variability that you will experience. Your responsibility is going to shift, right? You can't go to your boss and pursue adjustments on anything because you're the boss. The outcomes kind of come down to you, to what you did, to what you do in your day. And then also, like, there isn't that buffer necessarily between you and your risk. Again, there's no oversight. There's no one helping to control it or manage it or guide it or having your back. If a project falls through, your paycheck still comes and you get a chance to revisit something that you're working on. And so it changes your emotions that you will carry. When trading pays the bills, every red day has a little bit of a louder voice in your approach, in your day, in your week, in your month. And it doesn't mean that it's not achievable and that you shouldn't do it, but more so it's a conversation that you want to focus on prioritizing getting a system that can absorb the pressure and manage it before you allow it to take you out, basically. Knowing full on that these pressures are going to happen, you want to structure your approach into this experience with guardrails and padding and support that helps you kind of navigate it a little bit more cleanly. And then I would also say there's going to be some isolation sometimes from trading, becoming a full-time trader. If you have another job, potentially you have like coworkers that you really love or a strong team or you're around other people, there's office drama and engagement and socialization. Trading is not necessarily that. I mean, unless I guess you work for a prop firm, but most of us do not. Like an in-person prop firm, you're alone in your office. It can be kind of isolating. So there's also the factor that's on this page, but like it can be lonely and emotions will peak from that experience as well. And so you want to have some guardrails in terms of making sure that you don't get too loculated in a private, dark, isolated room, because it's challenging sometimes to have emotional stability if you're not getting fresh air, movement for your body, social interaction. So that's something also that you need to factor into this is a shift in business approach if you do it really very in a solo environment. You guys are here at this Blue Sky Lab and you guys know that we have Blue Sky Live. And so there are numerous opportunities to add to a trader's way of experience of life, I suppose you could say, in order to add a lot of variety into your life and manage this also. So everything on here is manageable, I guess is the point, but they are things that you're going to want to think about. So when you're thinking about this conversation of going from a casual trader to a professional, it's funding my life, I'm good to go, I've got this decision, you think, am I profitable? And then am I ready? So profitability is required, right? I mean, you're going to have expenses as a human. You're going to have to pay your rent or your mortgage and vehicle and food, travel, whatever have you. So you do need to be profitable. But readiness is kind of a broader topic, right? I think profitability, you have to have it. But how do we define readiness in order to lean into this business? So readiness can be spread out across financial, emotional, relationship-wise, logistical. A lot of traders will not consider all of the different angles that are going to factor into trading being your business. So then we want to kind of think about all of the different multi-layers of this conversation in our chat today. So you want to break it down and really think about all the different ways that we could or couldn't be ready for this. So let's get into that. So the financial part first, obviously, right? When you are trading, you have to kind of use your trading account as a tool, not so much as a checking account. So that was interesting to me for thinking about how to word this. I spent quite a bit in thinking about how this needs to be, visualized and adjusted and thought of, because trading capital can't be your living money in order to have the most stability as a trader. So there's going to be, I'm glad you're here on the same page. There's going to be a way that you need to think about how, say you trade with Thinkorswim and TD Ameritrade, and your money in there is not necessarily something you just pull out and pay your phone bill and you pull out and you pay your mortgage month over month. But if you can create a strategy around this exact concept, you're going to have so much more peace with it because there's structure and organization around it. So let's explain that a little bit more. Let's break it down. So your trading capital that you use to execute your positions on, say you are a trader of ES and your position is often 1 to 3 contracts if you're trading your own personal account. You need to make sure you have enough buffer in your account always so that you can execute a trade, because trading is your business. You essentially need to have a core amount so that you're always able to function within your business. So that capital can't be touched. Now, if you use prop funding companies, it's the same thing. Once you get to the live funded, you have to build up a base in their account so that you can execute trades. Blue Sky has their policies. I think most of you all know them, where you have to have a certain amount of capital and then you can skim off the top in order to take your payouts. Same thing, basically. It's built in within the structure of the Blue Sky prop firm industry. You would have to do the same if you're trading a personal account. And often many traders who use trading as their primary means of financing their life will do both. It's relatively common when you get to that level that you're trading personal money as well as with prop funding companies. So I would urge you to consider to separate those in your mind, and knowing that in order to execute as a trading business owner, your trading capital is not something you get to use for your bills. Instead, your trading account is your tool in order to operate your business. And so then you take money off the top after your wins and you pull that out of there and you put it in your fund, in your account that you're using to pay your bills. It's like a separate accounts, basically. You are checking your life account and your trading account. Trading account is the business operation money in order to function. But you don't think about, I need to go to Costco. I have 2 kids. I need to spend $400 on groceries this weekend. That shouldn't have anything to do with your trading account. More so, that's personal money. So you don't want to link your bills to your P&L in the day. And if you can get to a point where you're separating those things, it takes a lot of the stress off of the money, because an intraday P&L is not going to change the end of the week way that you manage your home and your life and your bills. And so your living expenses come from the withdrawn profits previously that are sitting in an active bank account. And so I think I kind of danced around that for a minute, but I want to explain it so that we can kind of really get it, that you don't pay your bills from the drawdown prone funds, right? Say you need, we'll just throw numbers out there, you need $50K in your personal account in order to execute your business without any stress and knowing you can manage your risk management. And if you have a red day, your account's fine. You don't want to pull from that and pull it down to 40 because you want to take the family on a trip. That's not an intentional, smart business management choice of your money, because then you're putting yourself in a vulnerable situation of potentially not being able to operate your business per your standards and your trading system that you've backtested, understood, and got you to the level that you're at in terms of being able to even consider this conversation. Does that kind of make sense? It's the best way to think about the actual capital versus your income that you get to live by in the situation of trading is funding everything that you want to do in your life. So this kind of expands upon that, is a financial guardrail in terms of having a runway. So this is often a great idea in terms of what you need to put in what account. Thanks, Coach Matt. Okay, so it's recommended, and you can go in different ways with this. This is a soft gray area. People can make a number based on their own personal life. It's going to be different if you are single. It's going to be different if you're older in life. It's going to be different with how many kids you have. It's going to be different if you're paying your children's college funds, or if you just have one who's in public school and you don't have a lot of added expenses. But somewhere between 6 to 12 months of living expenses is what you're going to need to lock down in your personal accounts before you're fully reliant on trading and you cut all other ties of income, because that gives you a real buffer. It's not uncommon to have red days and red weeks as traders. There's just a situation where that happens. And a red week, you want to be able to maintain your psychology and hold through that period and get back on track. And so knowing that you have 6 to 12 months of living expenses, depending on your exact dynamics within your home, you can breathe, you can relax, you can let go of losing days more relaxed and trust your system and approach it logically if you're in a drawdown versus emotionally. And so cash is different from expected profits. You can't say, Christmas is coming, for example, this week, I'm going to make 20K as a trader this week, and then I'm going to, pay all these bills of the stuff I just rang up on my credit card. That there's risk in that, because then you're trading based on expected profits versus what you have in your cash account. So again, different ways of approaching it, but there's a lot of risk and stress you're going to put on yourself if you're spending money based on expected profits. And so this all goes down to psychological safety is a way to think about it, because being psychologically stable allows you to execute your trading system so much more consistently, because you're not having big emotional pulls and fear and greed and anxiety that's causing you to mismanage your trades. Ideally, we want to be able to always operate our trading business based on how we see the market and what our best setups are, and to fire at our best setups and withhold when it's not a great setup, so we're not operating our trading with anxiety or fear. And so this is like a way to think about it, where a cash runaway does allow you to be able to trade per your system to the best ability. It will reduce your revenge trading. It will support you in being more patient and saying, if I don't get a great setup, I don't have to make $5,000 today because I'm okay. If I don't see a great setup, I'd rather not risk my account. I'd rather just chill and wait and see if there's another opportunity later. Or if you get a small loss and you're distracted and frustrated and the day is just not for it, it's okay. You don't have to win every day to still be a paid, profitable trader who funds your life from trading. And so then that way, it can really keep a little drawdown from ending your career. If you think about it like that, you're making trading your career, right? It's your business. And so you want to be able to protect that from multiple different angles. And by allowing yourself to have a cushion, to have a drawdown, that supports you to be able to maintain this over time. You want to say, what if I had, heaven forbid, 3 red months in a row? Like, what are you going to do? Like, if you want to be a trader for your entire life, say you're in your 30s and this is who you want to be, you are confident, you have a great system, you have great people around you, what happens if you have a drawdown? So protect yourself if you're going to approach this. So yeah, great question. Me, Mama Investor. I love your name. Hey. So it does apply to both. You can look at it either way. So prop payouts, basically built within the prop firm industry, the system that has is that they maintain a buffer in your system. And so you take the profits off the top. And so if like your account wants to have a 3K buffer in there, you get over 3K, you take the payouts and you put it in your checking account. And so that is similar. You just want to always make sure you're keeping a buffer in your accounts. Now, if this is going to be to fund your whole life, that's going to look a little different for different people on how many accounts you would want to have. And if you want to also trade personal money, like you might need more than, say, one prop account in order to fund a whole life. So you're going to want to diversify a little bit in terms of having a little bit more capital behind you in order to build up the amount of money you would want. And again, diversifying laterally will help you build that as well. It kind of spreads out the risk in terms of, you don't have to trade every account every day. And thanks, Kevin. You work it differently, but basically don't ever trade with your drawdown of your accounts. Pull out the money off the top where you have a threshold left in either your prop account and or your personal account. That way you can always execute your trades to your best of your ability without thinking about, I don't have enough money even to trade. I'm going to have to scale down, or heaven forbid, I'm going to full port as a full-time trader and risk everything because you're in a situation where you're in too much of a drawdown. Keep a cushion. Either way you do it. Great question. Yeah, no problem at all. Okay, so some of the, less cute stuff of this whole conversation. I know, right? Full port. Nacho and RQ, man. So I had to say it. So what about this other stuff, right? Like your bills are going to change if you have been in another job where you have a 401k and health insurance and dental insurance and accidental disability. Those are protections that are allowed to you from other businesses that you are the employee for, right? Those are perks that the business will give you as an employee as an offset of just your paycheck. So how are you going to pay for that? Potentially you have a spouse that holds that. Like right now, my spouse is a full-time engineer. And so he carries our health insurance, which is great for me because it gives me a little bit more cushion in that situation. But not everybody has that. And maybe you are the sole income earner and you're a boss trader and you want to stop your other job. And so this is something to consider in that situation. You're going to have to build up a bigger buffer and you're going to have to maintain a bigger buffer. I know, right? I'm very lucky. You're going to have to build up a bigger buffer in terms of paying your health insurance premiums, your dental premiums, self-employment taxes. That money that you pull out of your accounts, you have to pull a percentage of that out and put it in an account for your taxes. You have to think about your retirement that might be separate from just your day trading profits, which I think you guys want to make sure you're listening to Coach Matt's labs because he talks about the broader scope of trading outside of just like futures day trading, but in terms of position holding and investing. And that is a way to mitigate retirement planning. Say you don't have a 401k anymore because you left such and such business, but there are ways to be a trader and have your money diversified differently so that you're covering that. But that might not be something you think about if you're just a really successful futures trader. This might be the time for you to also structure your trading business in a way that you are spreading out your income and have some longer term, more conservative investments with some of your money so that you do have that cushion when you're older and maybe you want to travel more and you want your money to work for you and not be as intentional with it and start building that up. But again, that's all on you now if you don't have your business is providing that for you. And then the professional help, I'm like, that can go all kinds of ways. But basically, welcome to our labs here at Blue Sky. You want to make sure that you are asking people the right questions and considering all the angles of this. And so make sure you're getting advice from experts about these different things, about how to do your own retirement and about how to do your own taxes. You're going to might need help at tax season, at least a couple years while you're figuring it out, even if you're very skilled at the tax conversation. You're going to need some help with some of these transitions. If your work was not in finance prior to becoming a trader, this is something that you need to consider potentially using some experts on this for a little while to get the structure built for your own life, right? So that's a CPA. You basically are becoming the employer when you're a full-time trader. And so these are different, things to think about because you're not, YOLO, right? I mean, we want to just make 10K and book a weekend in the Bahamas, but you got to also think about the end game of your life and where you want to set up some structure behind that to be safe with it, right? I mean, also the Bahamas, but also health insurance. Okay, so here's the conversation, right? Do you keep a side gig? Because we're talking about there's going to be a transition here. And so I definitely think it's something to really think about because that could help you ease your way. What if you had a high maintenance career where you worked 50 to 60 hours a week and trading was hard, but you made it work? You got skilled, you're a skilled trader, you're able to start put money aside and start building up that cushion and think about how you can really make this work. So that's amazing, right? Maybe the transition to like kind of stress test this whole conversation would be a side gig. So income smoothing is a massive benefit of that because it's some consistent money that comes in that you just know in that situation, you could show up hourly and you have some income coming to you. Also, it's a little bit of psychological relief, right? Even if you're in a red week, you still get to make, maybe $700-800 that week potentially, or, $400, whatever it is. But that's, some gas, some groceries, a little bit of, bills maybe there. And so it takes a little bit of the edge off of the pressure you might find yourself in when you're considering this transition and you leave a full-time position. There's a little break for your brain in there. And then I love this part at the bottom too about time versus focus. So sometimes it takes the pressure off. Like it allows you to just do something else and focus there and take a break. If you're constantly like hunting trades and perfecting your trading system and talking trading endlessly, sometimes just shutting that off for a couple hours, a couple days a week can give you peace, can allow your fight or flight and your attention to trading just to decompress for a minute. And so there's a little bit of peace that a side gig can also offer you. So I like the term strategic pressure reduction, right? Strategic pressure reduction is what a side gig is. It takes the pressure off of how you're pushing at making this your full-time business. So, something to think about with what you might do for your side gig. Maybe you already know what you are. For me, I was a trader for 19 and a half, or a nurse for 19 and a half years. So for me, it's easy. My side gig is I just went down to part-time, small hours, 1 and 1.5 days a week that I get to pick and choose. So that's an easy discussion for me. But if you would need something totally different than what you have done because your work doesn't allow that, something to think about is like, you want to make sure you're going to have flexible hours and it's something that doesn't stress you out, because you don't really need more stress if you're transitioning trading into your full-time income. So not emotionally draining. And it's a break from the market is a strong thing to think about, because maybe that's really good for your brain is to have that break. But I would urge you to maybe not pick up something that really stresses you out or is high maintenance or has kind of a boss that you aren't super into. Anything that kind of gives you bad vibes or stress or anxiety, not helpful, because you're already trying to do something that has its pressure points. Like becoming a full-time trader is going to cause intermittent stress. I would caution you that that's just part of it that you're going to have to work through. And so adding different pressure on during that transition is not the goal of a side gig. Like I have a girlfriend who does Amazon deliveries, and she just gets like chill out with the podcast and drive around her town and deliver projects. And she really enjoys it, deliver packages. And so that's, something like that might be good. What do you guys think? As a side gig, anybody following me still? Do you think it would be helpful? Is anyone in that situation where you're doing side gigs now? Is it helpful or does it distract you? I think it's different for all of us, but it's like a nice little, okay, what, mama? We need to be friends. You should DM me, fellow nurse. Okay, there's a couple people. Okay, cool. Yeah. I'm not ready either. I have been trading. I'll just take a moment and tell you I've been trading for 4.5 years and I've been profitable for the last 2, but I don't want to put all the pressure there, right? I want to still be a nurse and I want to still do other things and I want to enjoy trading and not be anxious when I'm in a drawdown. I want to be able to have the drawdown and consult my mentors and work it through, rework my strategy, do some back testing and not be scared. I don't want to be scared for maintaining the needs of my family. And I am not quite to where I want to be in terms of P&L. So I'm going to hold my part-time nursing. Coach Matt says I firmly believe in trading should be only multiple streams of income. Yeah. Work from home. Yeah. There you go. Yeah. All right. I love that one, Marl. Drywall business. Okay. Yeah. See, there's different ways to do it. Do what speaks to you, do what your hobbies are, do what you feel passionate about, but make sure that you have enough time to really devote to being your best trader if you want trading to be the core funding of your life. But I think it's powerful. And Coach Matt even has been a trader 20 years and he still has multiple streams of income. And so I love that perspective, especially. Thank you for that, Coach Matt, because it just shows that it's a pressure reduction. It spreads out the energy. You know that your mortgage is paid because such and such is coming in from this other angle. And when I trade, it's like almost above and beyond, which is a good energy to come into trading being your full income from. Some people, it's out there where trading is their only income and they have a great, wonderful life. But I think that it's way more common for traders who are primarily traders to have something on the side that is reliable and you don't have to be as anxious about, less variable. So I definitely, thanks for you guys' feedback. I appreciate that because I think that this is kind of a sweet point in this conversation. Now, I think we're all adults in this platform, I'm pretty sure. There's going to be some pressures depending on what your relationship status are with who you're with. And so this is going to be highly variable per person. But your partner, if you have one, your family is going to have some nerves with this, and not unreasonably so. Let's be honest. There's a part of life where you want to have stability. You want to be able to trust that you're going to be okay. There's not going to be an eviction notice if you trade in the red for 3 months and you're in big, dangerous trouble. And so there's a point to which you want to make sure you're thinking this through to a point where you have stability for you and whoever else might be impacted by that. Yeah. See, it's okay. I love your feedback there, Ace, because partners they experience this with us. So, but they experience it from an outsider's perspective. And your family kind of feels the trading emotionally with you because there's variability with that. It's going to impact your emotions day to day. Sometimes you're real crabby after you feel like you really took a hit as a trader, but they don't understand trading. They don't understand, if you're not a trader, what it feels like to have had a really good trade go against you and surprise you and take you out. Like, it's hard because your partner understands parts of it, but not all of it. And so you want to really make sure you're having open and authentic conversations with the core people that need to know. I mean, I would certainly not think that extended family or friends really need to have any part in this conversation and might be a negative factor. So definitely only consult the people that really matter when you're approaching this, to protect yourself and your psychology. But this is going to be a factor. So you're going to feel more observed, right, when you're trading, because you're going to feel like people like, how's your day? Like, even now we have other income in our home and my husband will side eye me in the morning and be like, so what's going on? And I'm, he can tell by my face every time what the outcome of the morning was, even though I'm getting better at hiding it. But it's a factor, right? Because that money sometimes is earmarked for something within your home. So think about that. You want to have clear communication, figure out what you do say, when you say it, how you communicate it. And then also maybe bring them into like the planning of this in terms of what kind of a cushion you're going to have and how you're going to leave your accounts and where you're going to have what money and what funding behind that. And that sets expectations that you don't have to really dig into every little tiny aspect of it, the day-to-day activity, because you're both, anyone who's involved in this conversation just kind of understands the expectation, and it's not like a moment-to-moment situation you need to dig into with them. And so that can kind of enable you to have some boundaries with the conversations. So it doesn't have to be a trade by trade discussion with the person who you share your expenses and your finances with, but more so a little bit a broader picture, because there's some trust and open communication built there. So mental shift from working and trading. Yeah, definitely DM me, because I'm really comfortable with different conversations, but mental shift from working into trading PT and then trading part-time and then trading full-time. Yeah, that's today. So let me get more into it and then hit me up with questions at the end, Trendy Trader. We'll see what we all cover here. I love that for your wife, Aaron, because she wants you to stick with it even though you haven't made a dime yet. So that is beautiful. And I would say, make sure when you're having these conversations, you can talk about the way that this can grow and all sides. You guys can have visualizations of the dreams together, but just, do the nitty gritty of the whole conversation. Make sure you're managing your drawdown, because bad things happen when people get into really dangerous situations with money. And I just have to say that if you're in a dangerous situation, you want to be able to reach out to someone, because there are circumstances that maybe anyone has heard of, but where people do things dangerous when they're in a really stressful financial situation and a really bad drawdown. And we don't want that for anyone ever, ever in the history of ever, not even way beyond blue sky. So just make sure you have someone that you can talk to about all of this and feel supported and safe. Because if you ever get yourself in a dangerous situation with this money, that's going to be an important relationship that can help hold you down in that situation, keep you safe and deal with it realistically in the moment, So, let's just talk for a moment about that emotional part, right? So what about when you have a losing day and bills exist, or a losing week, or losing drawdown period? Because that is going to be a factor that you're going to have to deal with. It will happen, right? When you go to full-time trading and you start making that the core of your finance situation, there's going to be a red moment. And so your emotions are going to be higher because oh crap, did I make the jump too soon? Am I okay? Do I still got this? There's going to be some second guessing. You're going to feel like, what do I do with my time? Is my plan off track? It could stress you out. You could struggle with making the right choices in the moment because you're carrying a heavier emotional load. And so this is a risk in terms of having a bigger drawback. Yeah. Pick a better day when your edge is more prevalent. I think that's a maturity ace that, it's not always as intuitive when you're first getting there. And so I think thinking about what that will feel like to you and what you're going to do ahead of the situation coming will set you up for a better throughput on that. So you're going to want to have a plan in place in order to mitigate this when it comes. And planning ahead is just going to set you up for the better outcome, because you're not going to struggle in the moment of oh no, what do I do? How do I manage this? I am afraid. And then you don't make as good of choices. And so some tips on this would be guardrails. So a max daily loss. That way you don't have to do an emotional decision when you have a losing trade or two, is super protective. And you can set those on personal accounts. You can set them within Blue Sky on prop funding accounts. And that basically says you didn't nail your morning. So, go outside, go for a walk, go have a workout, go walk your dog, come back later. That protects your account in terms of saying, I'm not going to have more than a 2% drawdown or a $500 drawdown in my day because I'm going to be locked out. And so that right there is a physical choice you can put in place on your accounts that protect you. And beyond that, it can be other predefined walkaway rules. 2 losing trades, I'm done. I don't have it this day. I don't love the price action. It didn't speak to my edge. I'm calling it a day. Another rule you could do is no bill paying decisions on a red day. You can't choose to move any big money when the market is still open. You can't deal with financial decisions when your trading system is up. You can figure out what your what your threshold is for these conversations and put rules in your system in terms of treating your trading as a business so that you can manage this potential red day energy. I think the easy handles trading doesn't have to be hard or stressful. Yeah. Allow it to flow with it, basically. If you are going to have a red day, it's going to be a red day. Let the next day come, take some pressure off, be peaceful with it, flow state, exactly. And knowing that even the best traders in the world, sometimes their win rate is 60% because they manage their risk when they don't have the trade and they allow the big trades to pop. And so that is something where exactly you can flow with it, and knowing that doesn't have to be an anxiety thing. And planning ahead and putting protective measures in place within your system enables you to have that experience without having to make an emotional decision in the moment. You don't have to say, I'm going to stop. I should stop. I don't know. Is that another trade? I think it might be another trade. I could fix it or I could stop. You don't have to make those decisions in the moment. And knowing that you are placing a greater financial emphasis on your trading, having something in place to protect is going to be really helpful. So what about your low heart in there, right? So what about how do you protect yourself when you become a trader? I love the matrix. So I think you want to remember that your P&L does not define your self-worth. Okay. You can be a strong, amazing, educated, intelligent, kind, giving human and have a red day and feel like garbage for a hot minute if you need to, whatever your emotions draw you to. But then you got to figure out how to pull yourself back of you're okay. You're still a good trader. You have good people around you. You can talk out your loss with someone who, speaks market talk with you and work it out, learn the lesson from a trading outcome if you want. And then get back to being your bad Your awesome self. Full-time trading, I think, will test your identity. I think that that's true because, you might feel really freaking awesome being a full-time boss trader, and you might have some ego boost involved in that, but you want to make sure that you don't get your ego crushed when you have a losing day and let fear pop in there. Revenge trading video, yeah. Well, there you go. There's an idea. See, that's something you could do of like, if you're not feeling it, you could shut down your real money accounts and then just get an eval and do what you need to do there, but have that not be the money or the accounts that you pay your bills from. That's a killer idea, is basically, but then also make sure you're not feeding bad habits. Maybe take it easy on that. I mean, there's two caveats to that. You want to not allow like your demon habits to totally free reign. Use your judgment on that. But as long as it's contained, if you don't trade your real money in excess on a day where you're not feeling it, I think that is important. And whatever speaks to you in terms of shutting it down works best for you. Taking out an eval is an idea. Going for a hard workout, sweat it out, pull yourself out of your mind and into your body is a great idea. Basically, losses can feel personal when you're really relying on trading to fund your life. And so you've got to separate execution quality, market outcome, and your value, your personal value, your value to your family, your trajectory in life. Your trading is your work, and there is going to be trades that don't work out. Like, not every trade works out. You will get stopped out for the entirety of your trading career. You will experience stop outs. That's the work of being a trader. There's probabilities, and that's within your system, is that not every trade wins, and you shouldn't expect it to. That's part of the work. But who you are is still like a great person, basically. So make sure that you're having these conversations with yourself before you're in the heat of the moment. That way they come back to you more readily. It's like a self-talk, where you remind yourself of how great you are and how you're doing really awesome things and you're happy with where your life is. That way, when you're having a hard moment, that's still in the back of your mind. Be a robot. I mean, there you go. Maybe algorithmic trading. Okay, so let's get into some logistics with how you might do this. Big picture view here. So consistent profitability, that's a start, right? You need to be able to have a consistent profitability over weeks to months at a minimum, maybe even a year or two. Like, I'm on my second year of consistent profitability, and I am not willing to let go of my side gig. So consistent profitability for a strong chunk of time. To each their own. Like I said, maybe you have kids, maybe you have bigger dreams, maybe you have an expensive mortgage. That's going to look differently. Sort that out for yourself. And then once you get consistent profitability, start putting away your capital and your runway in your personal accounts, and start funding that as if you are doing all the things you want to do with your trading income separate from the other side work, and see how it builds up, see how this all holds. Those are steps 1 and 2. Like, you shouldn't be quitting your job until steps 1 and 2. And then you can consider, like, my trading system is holding. I have this money built up. I have had red days, and I've still been able to put it away. So then you can start the transition, because when you start the transition, that's when the real pressure comes. Like, this, building your runaway can be exciting and not super stressful because you haven't let go of your other consistent work yet. But when you start to transition, that's sort of the stress testing of this period. And so I think approaching it as a phases situation, instead of I am a casual trader and now I am a professional trader, instead of considering as a leap, as a phases and a transition, there's safety in that as well for your psychology, because you allow it to gradually become who you are and not be all or nothing. Instead, I'm easing my way into this because I am a great trader, but I know that I have to be smart about this. And so recognizing that you're going to be smart about this and do it in phases is going to be protective of every aspect of this, because it just allows you to slow down and have that be the strategic way to do this to the best of your ability. So definitely think about the phases of that. Now, the first one, which is that consistent profitability, you can approach it as proof of concept. So 3 to 6 months of consistency where you're really above and beyond your goals, and your accounts are growing over time, and you're able to pull off payouts and profits off the top week over week, month over month, for at least 3 to 6 months. You've got your system dialed in. You know what your setups are. You have delineated them in writing somewhere. There's a business playbook that you have written, that you understand, that you have fine-tuned, that you have discussed with your mentor, and that you have executed for months, because that's your business strategic plan. And in order for trading to be your business, you should have a business strategic plan. You should understand how you execute your trades and what your risk is on the trades and how you manage that. And it shouldn't be a conversation. This shouldn't really be a lot of gray in your business plan. And so that's your setup, that's your entry and exit criteria, that's your risk management. And you build that based on journaling your performance. Journaling is actually a powerful tool, and that's basically the bookkeeping of your business. If you consider your trading as business transactions, businesses keep books, right? That's what your journaling is. That is how you are knowing whether you're winning or losing, if your setups are consistent. If this setup has an 85% consistency of win rate and this setup only has 40, like maybe you consider cutting that one or figuring out what's could be better with it and managing it. And you only really know that from journaling your performance and studying your business and figuring out where the lag is and where the superstars are and how to prioritize your bigger wins. And so basically recognizing this is my business and in these ways I'm killing it and these ways I need to shore it up. That's how you can continue this progress. But this is your proof of concept and you're stabilizing it in order to be able to scale this up. And so you want to prove repeatability in this. It doesn't have to be perfect or genius or impeccable, but repeatability is what you want to strive for in this early phase, which I think we're all in right now. I mean, I certainly think that if you're a trader for more than, a few months and you have setups, this was going to be a phase that we're all kind of in, no matter where you're at and considering this going full time. So once you get that baseline, start pressure testing yourself. If you want trading to fund this incredible life, see what you got, right? Start pushing that, start withdrawing profits, start doing a trade copy here or there, simulate bill paying stress, recognize, I would really like to get 5K by this, or say, holidays coming up, your partner's birthday's coming. Say, if I can pull out $5,000 this week, I could buy my person this awesome thing that they would love and it would be a killer surprise. Well, before you need the money, you can put yourself on what if I thought I needed this money? You can start to pressure test your system and push it a little bit. Maybe see how you can do a little tiny bit extra on your grade A setup. And then think about and track how you do with that. Start trying to put a little pressure on yourself and maybe take a week off of work. I've heard of people doing when they're trying to transition out of full-time working. You take a week off of work where you take PTO or you take a sabbatical or something for a month even. And then you simulate this real world environment and you see how you do, see how it feels, see what your experience is. And that way, before you fully rely on your income, you're kind of learning to start to live with it and what it looks like, how it feels to pull the income out. It's a way to start the transition in terms of your psychology. And then in physical situation, you can do the partial transition in terms of cutting back your hours and your workload. And so, like I said, you could go from full-time to part-time or per diem, or, if you have a full-time engineering gig, you can go to just taking side jobs that are independent and not from contractor work, right? That's in your field of business. So figure out how to cut your hours and your stable, perfect, reliable income that maybe you had. See how it goes, right? You've been testing it. You've been pressure testing it. You've been pulling out off the top for 3 to 6 months at a minimum. Now is where you get to see what's up. Your side income maintains. So you have some space in order to push this, see how it feels, but you don't have as high of an income as you had. So now is where you put your money where your mouth is and you see what you got. You have the real life pressure. What this does for you is this phase reveals the weaknesses in a safer environment. It shows you where you struggle, where you hit your limits, where you start to encounter trouble and you don't feel as safe. You're worried. You got FOMO. You went on a full port day. Maybe you got scared. You had a loss and you decided to throw all your contracts and all your accounts out along because you're so sure it's going to happen and this is going to work and you're going to make it work. And then you realize that night, what did I do? I revenge traded. I went way out leveraged. My emotions kicked in because I wanted this to work so badly that I had a rough day. And so that can be how do I never do that again? Because that was not within my plan. That was not my strategic business plan, but you started to feel some pressure and an outcome happened. And so this period, use it to reveal your weaknesses And then to target them with your business system so that you approach it differently moving forward, right? Use that data as a means to shore yourself up, to make it a little bit more stable, figure out how do you need to adjust your business and your literal guardrails on your choices to stabilize yourself. And then if you get through that and you work through some of that, you shore up your system, you have even more months of consistency, then you do it, right? You go for it full time, but you have that set plan, that business plan, and your rules in place. So in this situation, you have to, trading would be your business, right? It would be your funding of your life, your business. So you want to have a schedule with it, a fixed withdrawal schedule, a system. You get over this threshold, you put this money over here, you move some into business, you move some into your investing. You have to make sure these bills are paid on time. There's a schedule with what you do with your money. You have set review periods, weekly and or monthly. You ensure that you're keeping up your journaling and figure out how you need to track that data. You start accumulating your data week over week, month over month, reviewing it. That's part of this monthly review of like, what went well, what didn't, where do I need to work, how do I spend my time? Because if you're a full-time trader, you should have more time in your schedule to do more back testing, to study certain setups, and to figure out how you need to adjust them to make them even more successful moving forward. And then how are you adjusting your risk limits? Potentially, maybe you're flying and you need to adjust your leverage, potentially leverage up a tiny little bit. Or if you're in a drawdown, maybe leverage down while you spend your time fixing your system a little bit. And so it doesn't mean that full time you're just good. You don't treat it like I've arrived, I've got this, I'm a boss trader. Like I just paid 3 months worth of mortgage on my trading, it's set. No, you want to check yourself at every phase of this and be like, what happened? How did I do? What did I do wrong? What did I do great? How do I lean into the great and fix the back end? And so that keeps the freedom that you're building sustainable. Yeah, study it. Sustainability in this phase is important. And so by having eyes wide open on what you have done and how you have done it is a really important part of this. I would say just keep yourself present with what you're doing and aim to continually improve it, because the whole idea here by phasing this in is to ideally not backslide, but maybe just when you start to phase it in, you encounter weaknesses, stay in that phase for months, for years. Stay in that phase until you really lock it in, because leveraging up before you're ready, when you start to reveal weaknesses and you ignore them, that's dangerous. Speaking of dangers, red flags to pause the transition. You're going to want to think about what would be a red flag during all of this. I'm trying. I like Zen mode. I like flow state. So increase risk to make rent. So if you're constantly start thinking about, I gotta make this money because this bill is coming. Like, I don't want to tell my partner that I couldn't do it this week, so I've got to get this money to make this rent. You're hiding your results from your partner in life. That's also a red flag, because if you're not comfortable enough to say, I lost $1,000 today, it was frustrating, I did honor my risk, I might take tomorrow off and just study. I had this conversation with this person who's my go-to person, and this is how I'm approaching it. But if instead you're losing $1,000, avoiding the conversation that night, the next day you go harder and you lose $2,000, you also don't tell your partner, that's a red flag. These types of situations that you could experience. Also breaking rules more often, same thing, leveraging a little higher to make it back faster so you can pretend that red day didn't happen, or letting up your loss limits at a given time in order to give yourself more freedom to make it back. You start breaking your rules. That is a red flag, because your strategic plan has rules in order to keep you safe and stable as an ongoing, like, full-time situation. So that should also set off a flag. And when you do your journaling, recognize if even one of these little things is creeping in your mind. Think about that when the markets are closed and you're not at your computer. Think about kind of why that crept in and what it might mean and how you can adjust. And then also the emotional exhaustion could mean that you're pushing really hard. And so taking a little pause is not quitting or backing down. It could just mean this phase has some areas you need to work on. And if you are feeling very anxious, continuing to trade may not be the answer at that point. Like, you may really need to take it seriously and back off a little bit until you don't feel exhausted, until you feel sharp and focused and ready to kill it. And so by recognizing red flags are a moment to take a pause for a day or two or what have you, that's being a professional. It's not being weak or afraid. It's saying, I don't feel amazing and I do better when I feel better. That is treating this as a profession. So I would encourage that. This was a lot to talk about. Honestly, I wasn't sure if I'd fill up the whole hour, but I mean, there's a lot to talk about, right? So we're nearing the end here. What do you guys think? What is some ways that you would consider guardrailing yourself when you start making money and profitability? Because I think that there's all of these are some good ones to think about. Having a savings built up when you withdraw your money, not only just putting it straight into checking, but putting percentage into checking and savings and a retirement investment situation. I love that. Yeah, risk rules are it for everyone. What did Ace share? You guys, if you can't see this in chat, it's amazing. Check out his screen share there. Ace has a strategic plan. Awesome. Yeah, fixed boundaries. I love having a daily risk that you honor is so important because that really does keep you safe. And that is fixed boundaries as well as risk rules that are just non-negotiables for you, because that's what a business would do, right? There are certain non-negotiables. You have to do certain things to keep your business afloat. And these are that, right? This is the structure around your business that allows it to maintain. And I love this last one, conversations, because that is basically like being honest with your people, with your closest people. Like Waji's in this group here today. She is my accountability partner. And if her or I have a hard day, we're going to talk about it. Like her and I are going to get on a call either after the trade is done or at the end of market day, or when our kids are somewhere where we can have an honest conversation, because letting it out instead of holding it in with someone who understands it is like real important for emotional stability through this period. Yeah. Oh, I love that, Coach Matt. You can bring your take to any part of anything I ever have to say, because I absolutely respect so much of what you say. Oh yeah. Okay, perfect. This is a real team around here. I think just thinking about it, treat this as a strategic business plan, as the heart of this. So excuse me. I think that this is your business, right? So if you are doing this and you're working through it and you're stuck in phase 3 of this, 4 or 5 phases, that's impressive. Like, this is awesome. Like, I'm so proud of you. You guys are doing great. It doesn't mean that you're behind if you're not a full-time profitable trader who is booking a weekend every other weekend out of town. That is some kind of goal, but like also respect where you're at and let it build with time. And I love this last point. Intention beats urgency. So like make this an intentional thing. Make it an eyes wide open, hard work. Like consider it an entrepreneurial pursuit where you have to have a plan and structure and follow up and a review, because that I think will set you up for the most success. It will help you from backsliding too often. Thank you, Mama Investor. Yeah, I'm every Tuesday. You guys are stuck with me. I really enjoy all of the people at Blue Sky. I really am very grateful to be a part of this community, and I love talking about everything around trade psychology. So I'm going to keep coming at you guys, and this was a really great topic that a lot of traders bring up and think about. And so I hope I did bring the value for you guys and covered some good topics that kind of helped frame it up for you. I think a lot of us, myself included, is in these phases. And so eyes wide open is my approach to all of this. Thank you. I know, right? Checking each other is important. And I get trading. I get this urge. I get the messy middle and pushing into early profitability. I understand about this whole process. So I'm here for the conversations. You guys can ask me questions. You can DM me if you want to go a little deeper, or if you have another topic, please do. You can send it to me directly or just post it in the Discord and tag me as Coach Becky. Eyes Wide Shut is a terrible movie. Thank you so much for your time, Coach Matt, and everyone. And Mama Investor, there is a Blue Sky YouTube channel, and all of my labs are cross-posted there. So it's Blue Sky Trading Company is the YouTube channel, and they get posted just a day or two after I record them. It'll be up there. So find it there. And a daily report card is a great idea. However your journaling speaks to you, do it. I mean, I've been there. I've been there on the red days. And so using that to journal and study and figure out what happened when is super powerful. So, I mean, good job on having a report card and considering the lessons of the day so that it gets a little better. Before I let y'all get on with your evening, does anyone have any last minute thoughts, requests, questions, feedback, anything I can tackle for you next week? Or I've got a short list of great ideas from other traders here. And I'm not afraid for any of the conversations, so I'm down. Ooh, what's on my short list? Fear and visualization. And I don't have it in front of me. Let me pull it up. I closed it down. Fear, visualization, leveraging. Those are my short list that I can think of off the top of my head. Yeah, there's so many aspects to fear. There's also like, if you're afraid, maybe it means it's something to really think about, you know? Oh, PTSD. Okay, so I was going to do one about addiction and PTSD. I haven't even wrote it on the list, but it was a thought. I think that's a great one tomorrow. I'm going to write it down on my list. Size F down. See, that's what I'm thinking with the leverage too, because people will often size up if they're in any sort of a situation where there's any sort of danger. I think so too. I actually had someone in my life who struggles with addiction, kind of really prevalent in my last couple of weeks. So that's made me think too about the different aspects of the emotional impact of trading. Yeah, it really is. Okay, I'm taking notes. It's okay to cry alone in front of the charts. Oh, I cannot even tell you how many days I've cried over trading. I'm not even going to lie. I say cry in my coffee because I'm a West Coaster, so I trade in the morning. I think that's trading brings out all of our emotions, and however you let them out. There's been some keyboard breakers. I've never broken a keyboard, but I have cried my little heart out. So to each their own with letting out those emotions, but there's a period where we got to learn that. So all right, I'm gonna let y'all go. We're getting into the afternoon, but really, thank you so much for being here with me. I'm really grateful to be a part of the team at Blue Sky. I think this is a great place to learn and grow together. It's a strong team, you guys, and I'm learning more about the team. I'm a pretty open person, and it's a strong team. So thank you for having me as part of your community. Thank you for being here at Blue Sky. And we'll be back next Tuesday. My labs are every Tuesday at market close. Coach Matt's are every Thursday at market close. He crosses over into psychology as well, but he has a strong technical focus on his labs. And then we live stream off and on all day. And I'll be back actually. Tomorrow's my long live streaming day during market. So thank you so much for the support and the teamwork around here. And I'll see you guys tomorrow. You're very welcome. Bye, everybody.